Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we are diving into the semi-annual shareholder report for Putnam Large Cap Growth Fund. Don't worry, it's not as scary as it sounds, but stick around, because what appears normal can be a house of cards just waiting for a breeze. This report covers August of last year through January of this year. It gives us a snapshot of how the fund is performing, what it's invested in, and how much it costs to run. We'll break down all the key parts. First up, let's talk about cost. Think of this as what you pay to have the fund manage your money. For Class A shares, the report estimates costs of $50 for every $10,000 invested over those 6 months. That's less than 1%. With Class C shares, it's 91%. With Class C shares, it's 91%. With the Class C shares, it's compensation that the funds take as compensation. 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 And for fast motion, moving on, we'll check out the key fund statistics. The total net assets, or what the fund is actually worth, is a huge number. Over $12.5 billion rate is 15%. This means the fund isn't trading investments that frequently. A high number here would mean they are shifting around their holdings. Now, where's all that money invested? The fund breaks it down into portfolio composition. They have a big chunk of the assets, almost 43% in information technology, followed by consumer discretionary at just over 18%, and interactive media and services is 15%. That means a lot of the fund's success relies on those sectors. It's important to remember that cash and equivalents can include some short-term securities and other assets. Looking at the specific stock investments, we see names like General Electric, Tesla, Amazon, and Netflix. That's what the fund actually owns. Big tech and consumer brands dominate the list. Also, a major part of the investment, just under 2%, is in short-term investments. All of their investments add up to over $12.5 billion. Now, let's see how the fund actually performed. On the statement of operations for the last 6 months, we see dividends and interest totaling about $33.9 million in investment income. However, the fund also had almost $50 million in expenses. This means the net investment loss was over $15.6 million, and a huge change in unrealized appreciation of over dollars, a realized gain of $300 appraisal dollars, a realized gain of $34, a realized gain of $320, and a huge change in unrealized appreciation of over dollar realized gain of $322 million, and a huge change in unrealized appreciation of over $1.2 billion that lead to a night-freed change in unrealized appreciation of over $1.2 billion. We can get a bigger picture by looking at the statement of changes in net assets. For the last 6 months, net assets increased by over $1.6 billion. A big chunk of that came from investment operations and a smaller amount from capital share transactions, which is the buying and selling of shares in the fund. Lastly, we need to look at the financial highlights. You can see that each class started at different places and had their own rate of distributions and investment income based on their differences. For example, Class A shares ended up having about 9.23 increase, while Class C shares only having about 9.23 increase, while Class C shares only increased by 6.92 cents. The board approved a new sub-advisory agreement with Franklin Templeton Investment Management Limited, or FTIML. Basically, they brought in another company to help manage the fund's investments. But the important thing is that, at least to the trustees, it didn't result in an increase in the advisory fee rates payable by each fund. The trustees said in the end that the fees were reasonable compensation in light of the nature and quality of the services that would be provided to the fund. So make of that what you will. Now let's step back and look at the big picture. Based on these numbers, Putnam Large Cap Growth Fund seems to be on solid footing, primarily riding the wave of tech growth. The strength is clearly in its investment choices. They have very heavy positions on the IT market. However, relying so heavily on just a few sectors does create a weakness. If tech takes a hit, so will the fund's returns. The key opportunity here is to diversify those investments. The main risk is that tech growth slows down or reverses. The numbers look good right now, the long-term direction remains unclear. It is very important to take the trustees' claims with a grain of salt, since they are obviously incentivized to portray the company's actions in the most positive light, comment. Let me know what other corporate filings you'd like me to decode next.